Investors and traders, welcome to the channel Market Chart Pattern. Today is 22nd of June 2025. Hope everyone is having a great weekend. So we'll take a look at the key US markets. In fact, we'll take a look at the world markets for the stock indices, and then we'll take a deeper dive into the US stock indices, and then we'll also be taking a look at some of the sectors as well. Then I will also be posting the charts on Substack if you want to get hold of the charts that we are going to see in the video, and maybe some more charts as well, then please go to the Substack. The link will be in the description, and if you want to subscribe, it's free as well, so you'll be able to get regular updates. So with that, we'll start the video. As always, the video is for educational purposes only, and it is not a financial advice. What we are looking at is our timing model, and we had a key timing coming in on the 22nd of June, and on the weekly chart we had the timing coming in on the 30th of June. So let me actually make it bigger. Here we go. And that's the timing I'm talking about. So we had a combination of the daily and also the weekly charts coming together, which is a confluence. So we should be paying really close attention to the time frame we are in now. With the weekly timing, we have to give it two trading weeks on either side, and as we had discussed in the previous video, which I did about the stock indices, the timing has come in a little bit early. I was actually anticipating a geopolitical event, which I talked about in my videos in March, so the long time subscribers might actually remember that, and that event has actually come in a little bit early. And if we just take a look at the news websites, so you can see what I'm talking about. Operation Midnight Hammer hits Iranian nuclear sites. So of course this is going to have impact on the markets. The interesting thing is that the CNBC is reporting that some of the Middle Eastern indices have actually closed higher for the day, so that's also really interesting. But if we take a look at the Bitcoin, is actually showing risk off. Of course, the trading is not fully done yet. It trades 24/7. So the market has been down about 2.5%, and for sure it has completed this ABCD pattern. This is what we were discussing, that if this trend line is broken, the chances are we are actually already in this AB equals CD correction to the downside, but it could still go and hit this exact number of 38.2% Fibonacci, 38.2% Fibonacci retracement. So just going back to the timing model on the daily chart. So here we are in this time period where we have our timing coming in, and the next key timing coming in is on the 2nd of September. So my thoughts are, when we actually begin to take a look at the stock indices, throughout the summer we are likely to remain range bound. Especially the key for us is the 7th of April low. Here we had the timing coming in, and we also had the price coming in and meeting really key pattern formations right here. So whenever we have the price meeting time, the pattern is complete. So it's really a strong pattern. This is why I pay so much close attention to it. And as long as the market remains above the 7th of April lows, I think it's going to be more of a range bound affair. And maybe in that time period between now and September, we begin to see some sort of resolution, and that might actually help the market. So this is going to be what I think might happen, but of course we remain guided by the price action, which we'll be following really closely. Okay, so now let's actually take a look at some of the world indices. So let's take a look at the Indian market, the Bombay Stock Exchange, the SENSEX. It had closed pretty strong last Friday, but I think we might see some risk off in here as well. I think it's going to remain range bound between this upper boundary around 83,200 and the lower boundary around 80,000 roughly. But on the weekly chart, here we go. On the weekly chart, we have some major patterns that had completed for this market. So this zone is like, it remains a resistance zone entirely, and we have seen what potentially might be just an A move to the downside, or this is X, A, B, A, B, C, D. We could have that sort of a move. So A, B, C, D to the downside. That is possible because of this resistance zone, or it could just remain range bound and maybe it's got a chance to go and hit this higher level as well. But this market, you can see that it's just gone nowhere for a number of weeks now, and on the daily chart we have that pattern that we have been watching. Now if we take a look at HSI, which is the Hang Seng index, this market, you can see that it's actually done quite well in 2025, but of course it also had big drops as well. But the interesting thing is that this market is, you know, the high came in back in 2018, and the market, although performed much better in 2025, which in my opinion was because of the repatriation from the US markets, it remains way below the highs there. So maybe it's got a chance to hit 26,300, which is the 61.8% retracement, or in this 27,500, this range, but it remains below its peak. So that's something to observe. Then if we take a look at some of the European markets, so let's take a look at the German DAX. The German DAX has been extremely strong in 2025. A lot of it might have actually to do with the repatriation of, money out of the US markets, dollar-denominated assets coming back into Europe, for example. And what we see here is it's got a chance to hit this bigger ABCD, where the CD leg is 1.618 times of the AB leg. It didn't hit it quite exactly. It missed it by, it looks like, by about roughly 300 points, but for something which is trading at 24,000, I think that is acceptable. And we have seen the market pull back, although not by that much, but we have had 2 consecutive negative weekly closes. But if we go down to the daily chart, here we go. On the daily chart, what we can see is that we had this smaller ABCD right here. It went exactly to this, so that's another reason maybe it missed those weekly ones, because the weekly ones are of course longer time frames, so sometimes my accuracy of drawing in the tool is a little bit less accurate. And then the market is pulling back thus far, and let's see how much it has pulled back by about 5.83%. So it's got a chance to go and hit this 38.2% retracement on 22,175, perhaps come into this box where I think there is good support for it. So let's see what sort of price action we get out of the German stock market. Now, the one which is really interesting is actually the FTSE 100. It just missed just by really narrow margin, making a new all-time high. Interesting is also it completed this ABCD, where the CD leg is 1.618 times the AB leg. And now on the daily on Friday, at one point it was performing really well. But I think someone knew perhaps what was going to happen, because in market we have really clever people who come and operate in the marketplaces. It closed really at its lows and below the 20-day moving average on the daily chart. So I think it's got a chance to move a little bit further lower based on the price action that we see on the Bitcoin, which is risk off. Now let's take a look at the US stock indices. So we'll start by taking a look at the S&P 500. As I had mentioned before, the S&P 500 is likely to remain range bound in this shaded region, and I think it's got a chance to pull back, which the pullback might have already started, although it's finding a little bit of support from the 20-day moving average. If it begins to close below that, I think it's got a chance at 5,700. So likely to remain in this range bound formation till perhaps September, when we begin to find some sort of resolution with a lot of things going on, including tariffs. And that might actually clear up things, and we could see perhaps a rally. If we begin to close below this, then I think it's going to be a deeper retracement, and we see this open gap right here. Then I think that could also become a target where the market can pull back quite a bit. So the real thing for us is really this low right here, 7th of April. As long as that is held, I think it could be more of a range bound affair in the markets. Getting below this, I think a lot of things will change. Our analysis will have to change as well. And then if we take a look at this on the weekly chart, here we go. So you can see 2 consecutive weekly closes which are in the negative. It's just a really range bound market. But if we begin to get days like where the market is sharply down over 2% to 2.25%, 2.5%, and then we get a follow through the next week, for example, that could be start of a big move. So essentially, we should be looking at 2%, 2.25% moves on the daily chart. We haven't seen one of those in quite a while, but if we begin to see something like this, which is nearly 2%, and this one was about over 1%, that's going to be a pretty strong indication, and especially for NDX closing lower by 2.25%. That's going to be a 2 standard deviation move roughly. And especially if you get a follow through, then that would be an early indication. So S&P 500 made this pattern formation right here, try to rally above the 1.272 expansions, multiple of them, not able to successfully do that. And we are seeing a range bound market finding a little bit of support right here, but still got a chance to go down to 38.2% is where it could go down to, and that will be about 6.25% move to the downside. Now let's take a look at NDX, which is the Nasdaq 100 cash, and it also, just like FTSE 100, also the German DAX, it also completed this ABCD, where the CD leg is 1.618 times the AB leg, and you can see it's just gone nowhere. It's just gone nowhere since 11th of June, and this move was last Friday, roughly about 0.5% to the downside, right at the 20-day moving average. Getting below this, I think it can also move lower to this 38.2% retracement. And if we take a look at this on the weekly charts, here we go, 2 consecutive closes, just like the S&P 500 into the negative. But again, the key remains, if it remains above the 7th of April lows, which are really important from a trend perspective, then I think a lot of things will be changing if it begins to close below it. Now let's take a look at this from a futures perspective as well. So this is what we're looking at in the futures market weekly chart. It hasn't been able to make new highs yet, and here, but it retraced quite a lot of it. So you have to look at this and wonder, this is a V-shaped recovery. And then if we take a look at this on the daily chart, here we go. A little bit different picture to the cash market. This is why I like to take a look at both. NASDAQ is the futures market shorter term moves, and the cash market, of course, for the longer term moves. And here we can see that it's a really range bound market. But we can argue there is a trend line like this. If it begins to close below that, then 38.2%, like 20,500 roughly, is something which we'll be watching. Now the most interesting one is, of course, the Dow Jones. This is the futures chart, because this one has been the weakest one. It's not even able to make the 78.6% retracement of these new highs that it had made right here. And then this recovery is just not as strong as S&P 500. It's not as strong as the Nasdaq 100. It's a weaker market. Probably is because of the 2 reasons: the kind of stock it has, and of course, it is price weighted. It's not market cap weighted. So higher pricing stocks has an impact in it, and we know that Apple, for example, has been not as strong as some of the other MAGA Mag 7 stock, Magnificent 7 stocks. So number of stocks perhaps higher weighted in terms of price, not doing well. It's going to have an impact on that. But whatever the reason might be, technically it remains below the 78.6% retracement, and this is by how much we had a previous retracement. So if it decides to have a retracement, it could go down right into this shaded region. That remains a possibility. However, if we take a look at NYA, which is the New York Stock Exchange Composite Index, it's not something which is tradable, but it's really good to look at it from a reference perspective, because it's also got ADRs, which are the foreign companies, Alibaba trading on New York Stock Exchange. And we can see that this is a much better recovery in comparison to Dow Jones. Resistance coming from structure right here. It remains below this high and this high. So of course it has not made a new all-time high, and it's just consolidating right here. But again, not looking too bad. But I think it's also, we have got some sort of a pullback in the making. Russell 2000. So this one is the most one of the weakest market that we follow here, and on this chart, which is the futures, let's see what sort of retracement it has done. Right to the 61.8% retracement. It's just not able to close above it. So I think it's just going to remain a range bound affair, maybe move down a little bit. And if we take a look at this on IWM, which is going to be the ETF, the cash market for it, I think we have something similar in terms of the pattern formation. This is right on the 61.8% retracement as well. So getting above this 216 is really key. I would like to think, I think it's going to be more of chop, range bound, pullback lower, maybe then build some sort of a base and then try to make a recovery higher. But again, 7th of April lows are really key for in all of these markets that we are following here. So I think I've covered pretty much all of the key markets, that the stock indices that we like to follow here. And just one little yeah, let's take a look at the sectors now. So let's start by taking a look at KRE. And KRE, we were following it on the weekly chart. And KRE here, this is basically regional banking ETF, and it's got a 135 pattern. So you can see it's got just lower highs and lower lows here, and it got a nice bounce from 61.8% retracement, went right to the 61.8% retracement of this high to this low. So the chances are if it's not able to get above this 60.29, it's coming back to test this low of this range, or maybe a little bit lower right here. And XLF, which is the ETF for the financials, this one, it's got a candidate for a head and shoulders pattern. I think one of the things is that XLF also has MasterCard and Visa, and those are suffering at the moment, those stocks, because of Walmart and also Amazon and maybe some other big players in the retail. They are thinking of actually accepting payments in stable coins. So of course that's a competing mechanism. And since the MasterCard and Visa has quite a big percentage in XLF, so that might be the reason. Otherwise, some of the stocks like Goldman Sachs, for example, I'll show you right here, they have recovered really nicely, and JPM as well. There we go. So I think it's got the XLF is going to be range bound to the downside a little bit till because of what's going on in Visa and MasterCard. And then let's take a look at the XLU. Here we go. And XLU, I think what's happening is, as long as this low is held, it's still got a chance to complete this pattern. Otherwise, sideways to maybe moving down a little bit in this range. So I will post more charts on the Substack for the ETFs. So please do watch the Substack space. So thank you very much for watching the video. And if you like our videos, then give it a thumbs up. If you enjoy our technical analysis, please do subscribe to the channel as well. So thank you very much for watching. Good luck, good trading, and speak to you guys soon.